Hello everyone and welcome to Financial Intelligence. If you are among the millions of Americans who contribute to a 401k plan, you are very likely investing in mutual funds. Mutual funds are the most common investment options offered in 401k plans. Therefore, you should know how much investing in different mutual funds costs you so that you can pick the best option for your future. In this video, I'm going to talk about three topics. Number one, what mutual funds are. Number two, expense ratio or management fees for mutual funds. And number three, the best mutual fund options out there. Before we get started, don't forget to like this video and subscribe to this channel and hit the notification bell so that you don't miss any of my future videos. So what are mutual funds? A mutual fund is a type of financial vehicle made up of a pool of money collected from many investors to invest in securities like stocks, bonds, money market instruments, and other assets. Mutual funds are operated by professional money managers who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. A mutual fund's portfolio is structured and maintained to match the investment objectives stated in its prospectus. A prospectus is a formal document that provides details about the investment objectives of the mutual fund. For example, if you are planning to retire in 2040, you might decide to invest in a mutual fund managed by, say, Vanguard that aims at offering the best returns for people like you who are also planning to retire in 2040. As another example, you might want to choose a mutual fund that is more aggressive or more conservative in their investment strategy. Since mutual funds are actively managed by professional money managers, they usually charge you a fee to cover the operational costs of running the fund. Therefore, when deciding to choose which mutual fund to invest in, it is critical to know how much these operational costs are. That brings us to the definition of expense ratio or management fee. What is an expense ratio? An expense ratio, also known as the management fee, measures how much of a fund's assets are used to administrative and other operating expenses. An expense ratio is determined by dividing a fund's operating expenses by the average dollar value of its assets under management. Operating expenses reduce the fund's assets, thereby reducing the return to investors. It is easier to demonstrate this using an example. Say you have invested in a mutual fund that returns 7% on average, that is without taking into account the operational cost of running the fund. Also assume that the fund has an expense ratio or management fee of 0.5%. This means that your total gain is going to be 7% minus 0.5%, which is equal to 6.5% after paying the fees. Expense ratio or management fees are usually expressed in percentage. You can always find out how much the expense ratio of the mutual fund you've invested in is by looking at your 401k statements. Best low-cost mutual fund options. You can save a ton of money by identifying the right mutual funds to invest in. The higher the expense ratio, the more you are going to pay over time in management fees. The difference might not seem that big of a deal at first, but over time they add up to a significant chunk of money. In general, large investment management firms offer better rates because they benefit from the economy of scale. However, you'll find wide variations even among management fees charged by large firms. A great place to identify the most cost-effective mutual funds is a website called Morningstar. They also publish a report where they stack rank top investment management firms based on their management fees. I have borrowed this data from their latest report. I will add the link in the description box below so that you can also access it. You can see in this chart that Vanguard offers the best expense ratio when it comes to mutual funds. Note that this is their average rate. Since Vanguard offers a large variety of mutual funds with different objectives, the management fee on different mutual funds are going to vary. Having said that, this chart provides a great baseline to inform your investment decisions. Another important point to note here is that choosing smaller investment firms to manage your money is typically going to cost you more money in terms of management fees. For instance, take Acorn, which is an app that rounds up your purchases on your linked credit or debit cards and invests the change in a computer-managed investment portfolio. Here is their fee structure. They charge a flat fee of $1, $3, or $5 depending on your plan. I've also included their average management fees based on the amount of money you decide to invest with them. As you can see, when you invest more, the expense ratio goes down. However, the rates are pretty high even if you decide to invest, say, $1,000 per month with them. Now, using Vanguard's average expense rate, which was about 0.1% as our benchmark, we can decide if we should invest with Acorn. Acorn's rates are higher than Vanguard's in general. The only case where Acorn's rate becomes competitive is if you decide to invest $1,000 with them every month and choose their cheapest plan. Obviously, if you decide to invest even more than $1,000 per month using their cheapest plan, then Acorn becomes more economic than Vanguard. I hope that you like this video. If you have any recommendations or suggestions, please add them in the comment section below. And don't forget to like this video and subscribe to this channel and hit the notification bell so that you don't miss any of my future videos. Thank you and take care.